Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the December edition of Digging into the BI. This is where members from the Maryland chapter and the DC regional chapter get together and look at the latest issue of the BI magazine. Here are the four stocks we will be looking at tonight: Five Below, Arista Networks, Paychex, and Estee Lauder companies. And we're glad to have you here. So let's go to our next slide. This is the standard better investing disclaimer. We're doing these for educational purposes. Investors should conduct their own review and analysis of a company before making a decision. The securities that we discuss, they may or may not be in part of our personal portfolios. We'll try to alert you to that. And whatever websites or products that we show here, it's not an endorsement or promotion of it. And we will be recording this and putting it up on YouTube later on tonight. So we're glad to have you. Next slide. So again, most of you I see in the audience are our regulars or our members of Better Investing. But since this does go out on YouTube, and some people may not know who we are, this is betterinvesting.org. And you'll see at the top of all of the slides, basically the URL to get there. But what we are is this is a investment education organization, and everything is focused on long-term fundamental investing. And if you download the handouts over in the control panel, anything with a hyperlink will take you to additional information. So if you need to know more about those things, you can go ahead and download the PDF and be able to click on it. Let's go to our next slide. So this is where we also said we're up on YouTube. There's our web address up there. It's digging into BI. We're trying to slowly grow this universe. So if you haven't already, go ahead and like and subscribe to these things and share the video. That's how the algorithm works for YouTube, which is owned by Google. So if you're a Google shareholder, go ahead and please share it so that way you'll be able to get more people looking at your product. But again, we're glad to have everyone here. And the one thing to keep in mind with the video that goes up on YouTube is that they're organized in what are called chapters. What that is, there's little breaks in between each one, so you can just advance to the area that you want to. If you just want to listen to one of the stock presentations, that's a quick way to do it. Next slide. And again, for those people that are having trouble with the audio, we haven't had this in a while, but just in case you are, look at the help thing. That's sort of that globe up there. The audio settings will be able to help out. Most of us are probably on our computers, so make sure you're clicking on computer audio. And then again, there's where the handouts are. And go ahead, you'll have 4 completed SSGs by the people that are presenting tonight, as well as the full slide deck for everything there. And you can share those with whomever you like. Next slide, please. So why are we doing this? Well, we think this is a great way to be able to show people our approach to investing in the better investing world. And it's a great way to be able to sort of connect with other people in this community. If you're not a member already, up at the top, there's a hyperlink there for a free 90-day trial so that you can take a look at it. If you have someone joining your club and they're maybe not a member already, go ahead and show them this and they can be able to join it. You do not have to be a member of in the Mid-Atlantic, which is Maryland, DC, or Virginia. We're glad. I know I see some people here that are from outside that area. That's great. But we're here trying to be able to promote stuff in the Mid-Atlantic and also the Model Club and what was formerly called the Visit a Club program and now is called Club Connect. We'll talk about that in just a moment. Next slide. So in just over an hour, we're going to do 4 stock presentations. 2 of them are going to come from the BI magazine, the monthly stock to study and undervalued feature. Those are, you have to be a member to be able to actually see those things, but we will show you our analysis of them. And then the other 2 come from either the BI website or the magazine. Sometimes it can be personal experience, but all those things down in that last 2 lines are some of the places that we usually find them. And it's basically to be able to show you all the resources that you get already as part of your membership. Next slide. So for those people that you do not need to see the news releases for the upcoming ones. If you just go to Better Investing and Home About Us, you will see. So these two stocks, Five Below and Estee Lauder, were announced on October 2nd, so a full 2 months ago. Um, and you can be able to see they already have the stuff up for January and February already. So you can see that next month will be Gentech and also Ares Capital Corporation are the two stocks we'll be looking at. So anyway, let's go on to our next slide. And for those of you that are members and you are receiving these announcements, you can always change your subscription information to be able to get information from your local chapter. If you're in DC or Virginia or Montgomery County, you'll automatically get local announcements from the DC chapter. If you're in any other part of Maryland other than Montgomery, you will get the notices for the Maryland chapter. And the same goes if you happen to be in other parts of the country where there is a local chapter. And to do that, you go to My Accounts, where the red circle is. You come on down to Email Subscriptions and Product Information. That's the green circle. That opens up the big green window on the right-hand side. And the way to do that, to get that local news, is to be able to click on that local chapter news and event that Cheryl's sort of pointing to. And I don't have it highlighted this time, but up there, just a couple above that, is a BI weekly newsletter. Anyone can be able to get that who's a BI member. And if you save that, then you will be able to get that on the weekly notification. And let's go to our next slide and we will talk about the weekly newsletter. So this is for members only, and it highlights a lot of the stuff that's going on in our community. This time I'm sort of focusing on the stock up that will be on December 13th. And then the next day, there's also new stuff with what's new in the Better Investing online stock tools. I've noticed that they've made some changes to it, so you can be able to take a look at it. You can register for those events, free for all members. Otherwise, you can be able to look at it in the video learning library later. To make this a little bit easier to read, there also are some screens and some other stock ideas that are at the bottom of the weekly newsletter that is not included in the screen capture, but go ahead and do it. And so if you signed up and you're not getting it, check your spam filter. Next slide. And we're also up on Facebook. We have both a Facebook page for the DC chapter and the Maryland chapter. You do not have to be a member. Great way to be able to reach out with people that you're maybe possibly trying to get interested in your club or in your chapter to be able to see what's going on. So if you are in this area, go ahead and do it. We know we get people from outside this area also checking in on our stuff. A lot of the other moderators of other chapters across the country seem to look at each other's stuff. But go ahead and take a look and we'll see some of our stuff going up there. Next slide. This is the Maryland chapter. They have one of the BI meetup chapters. It's another way to be able to connect with it. You do not have to be in the Maryland chapter or a BI member. I think there's 9 different chapters that are doing it right now. And it's, again, a way to be able to connect with fellow long-term investors to be able to take a look at it. If you don't know anything about Meetup, although most people probably have heard of it, but you may not know all the details of it, that blue highlighted box that Cheryl's pointing to, those are the places where you can find a little bit more background on either the YouTube, on dealing with Meetup, or the Wikipedia pages and the like. So go ahead and do that and be part of the larger community. And let's go to our next slide. Cheryl, you want to tell us what's going on in the DC chapter?
Hi. This is, we have a DC chapter page. It's under the chapters listing, and you can go then to our local events, and you can see not only what we are doing tonight, the Digging into the BI magazine, but also the 2 model clubs that we have, McNova and MCMC. They also have meetings every month, and they are virtual, as well as this is virtual. In fact, pretty much all the things that we do are virtual now. And then we also have a Money Matters book discussion. There will not be one this month in December. They take off for that month. There will be one again in January on the 16th. and it is the third Tuesday of the month. And back to you, Kevin.
All right, thank you. And Rudy, why don't you tell us about your club and all those good-looking people in there, including someone who's visiting from Florida is in the audience tonight.
Our club has been around over 25 years. We do have virtual partners. We have someone moved to Florida and someone moved to New Mexico and remained in the club. Right now we have 8 partners. We meet on the second Saturday of the month. The information, if you want to join us, is there. Anyone's welcome to join us. This week we'll be talking about Take Stock, Chapter 10, Evaluating the Price. And the stock of the study is Arista Networks and presented by the person who's in the front in the photo. Thank you.
Very good. Thank you. And the same photo, because actually this was a social event that the Model Club and Pinnacle did together. So that's a combination of all of us in there. But the Montgomery County Model Investment Club meets on the third Wednesday of the month, and that's free and online. We have 5 partners. We've lost a few because of, things change and stuff like that. But we are looking for people, particularly those that live in Maryland, and even better if they live in Montgomery County. And we're going to be looking at the Nicholson Triple Play stocks as our education. And we're going to be looking at Catalyst Pharmaceuticals for our stock study. So there's a link. Come and join us and hang out with the cool people. Next slide, and over to you, Cheryl.
Well, we are the NOVA, so we're the Model Investment Club of Northern Virginia. We currently have 13 partners, and we meet on the second Tuesday of the month. We meet virtually. So this meeting this month is going to be the 12th from 7 to 9 p.m. There is the virtual link right there in the middle in blue. And you can also get to us by dialing and using your phone. The education has not been set yet, so that's still to be determined. However, we are also looking at Catalyst Pharmaceuticals, and there is the point of contact link. If you want to get in touch with us, it's free to tune in, and there have been many people who have tuned in who have also become partners. So we look forward to meeting everyone who does tune in. And back to you.
Okay. Well, back to you.
I've got this one too, I guess.
Yeah.
All right. There is a new program out there. It used to be called Visit a Club, and now they've changed it to Club Connect. So as you can see, if you go into the main page of Better Investing, there's that title at the top called Investment Clubs. And there's the link right below in red called Club Connect. And it's set up such that it's either you push a button for clubs that are looking for members, or it is another button that you can push if you are an individual investor looking to join up with a club. And it will connect you to those people that in the background who will then get you set up, people to talk to. And then you can go forward from there and decide if the people you are connected to are a good fit for you as in terms of your investing, how you invest and the things that the methodology that you use. And please check it out and let us know how it works. That would be great. Okay.
And so since this is called Digging into the BI, we might as well be able to talk a little bit about the magazine. My paper version just came this week, but the electronic version came out almost in early to mid-November that you can be able to see there. You can also, from that, you can look at it on a computer, a laptop, a tablet, smartphone, or any other electronic devices. I also have the app that's on my phone. There's a picture of my phone from where I have it, so you can take a look at it there over on the left-hand side. Let's go to the next slide. And here's how you can do it. It's a different sign up than what you have for your regular one. But if you see where that green arrow is, it says Better Investing Magazine for Mobile Devices. If you go through that, it's pretty self-explanatory. But if you have trouble, you can always reach out to headquarters during headquarter time and they'll be able to help you. The red arrow, where it has analyst reports and other resources, every time with the featured stocks, either the stock to study or the undervalued feature, they always say there's additional information on the at the website. And this is where you would find it, is under Learning Center BI Magazine, and then the analyst reports and other resources, you can find it there. So if one of these featured stocks you like, that's a great place to go to get additional information. Then the next thing is to be able to take a look at the actual electronic version. If you see where that green sort of highlighted areas in the center where it says view the magazines, click there. And we'll go to our next slide and we'll talk a little bit about some of the other things that are going on. We like to feature one of the columns that's in the magazine, and this time I decided to do the book value column. This one they're talking about the new rules of money, and it sort of struck me as that what Angel sort of wrote about this is that financial self-care means scheduling regular times in your schedule to not only look at the big picture, but about checking in financial accounts, but also taking care of like those urgent money needs and stuff that you have, and also calling out some of your digital subscriptions that you may not need anymore, and also making sure to update and take care of things with your will and investment allocations, retirement investment allocations. So take a look at that article and maybe even consider grabbing that book, either from your local library or from Amazon, because I own Amazon and I'd appreciate it. Thank you very much. Next slide. Also, at the end of the magazine on page 51, there's always sort of investor education column of stuff that's coming on. Most of the stuff it's kind of slow here in December, but I did notice that the Northeast chapter is having a free event on the 14th of this month. And if you go there, you can be able to click on that and be able to sign up for it. But these are all compiled by headquarters. So we need to actually get this event up in there so people can see it. But we seem to be doing okay without it, but it'd be nice to have it also in the magazine. Next slide. Well, we've done enough talking of the intros. Now it's time to do what everyone really comes for, which is to be able to hear the stock presentations. Our first two stock presentations will be done in core. Rudy is going to be able to tell us about Five Below, and then Cheryl's going to talk to us about Arista Networks. So take it away, Rudy.
Okay, next slide. All right, Kevin already said where we got this stock from. However, it is on a NASDAQ, and in April of this year, it was number 133 in the top 200. Next slide. You've seen this, but if you get the magazine or if you go online, you see it down there in the stocks to study, and I believe it's on page 20. So next slide. Five Below was founded in 2002 in Philadelphia, so a little over 20 years ago. They went public in 2012. The sector is consumer cyclical, and the industry is especially retail. They were a medium-sized company. In 2022, they did $3.1 billion in sales. They're located in 43 states with over 1,300 stores, and they have 22,000 employees with about 6,500 of them full-time. Next slide. Five Below is a leading high-growth value retailer offering trendy, high-quality products which they believe are loved by teens, tweens, and older. Five Below believes that life is better when customers are free to let go and have fun. So that you'll see that a lot in their advertising and in their stores. And they say that their stores are an amazing experience filled with unlimited possibilities. Most of the items are priced between $1 and $5, thus the name, Five Below, with some extreme value items priced beyond $5 and in their Five Beyond offering, which I'll talk about toward the end. And they define that as incredible. And Five Below says that they make it easy to say yes to the newest, coolest stuff across 8 Five Below worlds. Those worlds are style, room, sports, tech, create, party, candy, and new and now. Next slide. So they basically have what they identify as disruptive products and distorted value. So they go for fads, what young people are buying. They also have well-known licensed brands, as you can see there. Disney, Warner Brothers, Lego, all the major ones, and they focus on trendy items. Next slide. Their concept is celebrating the rituals of life as you go from adolescence to tweens to teens and beyond. So they have things that they've piloted in a number of their stores, like ear piercing. And last year they piloted in 150 stores. And their concept is to pilot different things in stores. And then as they prove profitable, then they roll them out to more stores or all of their stores. They sell balloons for parties and all the things you would need to create a party. I mentioned earlier Room as one of their worlds, and that is they cater to teenagers who want to create their own space in their bedroom, and so they provide themes that entice teenagers to fix up their rooms in a certain way. They cater to people having their first car. They want to personalize it and get steering wheel covers and lights and any type of doodad that'll make their car different than anyone else's. And they also have pet accessories. And so these are some of the areas that Five and Below cater to in order to create customers. Next slide. As you can see from the numbers here, they've grown considerably. They started 20 years ago with one store in Philadelphia. And on the first or second slide, I mentioned that they went public in 2012. But look at the growth since they've gone public in the last 10 years or so. Their sales have grown 10 times. Their operating income, 1.5. I'm sure they put the 400 basis points here because 400 looks larger than 4%, but they've grown their margin 4%. And they've grown their stores, the number of their stores, 6 times. So you can see significant growth historically. Next slide. And this is just an example of that growth. You see it's been steady every year from 2015 to, in this case, 2021. They experienced the compound annual growth rate of 23%. They grew their net income 30%, and their earnings per share grew 5 times over that 6-year period. So it's been very steady growth. Next slide. And so right now, they, or at least in the end of 2022, they did $3.8 billion. And so for the third quarter of fiscal 23, net sales are expected to be in a range of $715 million to 730 million, based on opening approximately 70 new stores and assuming a 2% increase, comparable increase in sales. And their net income was expected to be in a range of 10 to 14 million for the third quarter of fiscal 2023. And for the full year, expected to be in a range of 3.5 billion to 3.57 billion. And it's based on them opening 20 new stores. And that's going to increase their sales 1 to 3%. And as you can see up top, on the right-hand side of the green rectangle, when they open a new store, it only takes them less than a year to pay back. That means after a year, those stores are profitable, based upon what it costs them to invest in, open a store, and the sales that it generates. Next slide, please.
5 minutes, Rudy, 5 minutes.
Okay, so I'll go through here really quickly. This is the core, and basically what I want to show here is the black line is their growth rate of historical sales. You see it's going directly up, and it's basically below the industry and peer group average, but the slope is steeper. Next slide. Their earnings per share has been stable. It's in line with the industry average and much higher than the peer group average. And you can see the peer group average is all over the place, but theirs have been consistent. Next slide. Their stock is very volatile, the price of their stock. But however, it's been growing, and you can see it. There's a constant growth there. Next slide. Management on the right-hand side are the management, the officers. But what I wanted to say about management is, with the exception of 2020 pre-tax profit, it has been stable over the past 10 years, and stable margins are an indicator of a well-managed company. And so you can see from the graph, their return on equity has also been consistent. And although debt has increased, it's still below peer and industry average. Next slide. And this is the forecasted sales. It says 15%. And as you can see from the graph, their sales is increasing at a much steeper rate than the industry average. And as you can see, their peer group average is actually decreasing. Next slide. Their forecasted earnings, I said, would be 18%. And if you can see from the graph there, I used the last quarter, and actually the slope is slightly less. But the estimate that I have in there is less than the trend line. Next slide. The forecasted high price, I think Value Line said it was, I want to say $3.95, something like that. And so I felt comfortable that the high price that I used, using the 5-year average PE, basically is accurate. I did eliminate the outlier from 2020, so that kept that line pretty flat. And so that's why I used the 5-year average versus the 5-year average high. Next slide. In terms of the low PE, I basically used 80% of the current price at the time I did this, which I think was 152, and the PE, low PE of 31 gave me near that price, and that's why that is there. Next slide. And this is the upside downside ratio. You see it's in a buy range with an upside down ratio of 5.4 to 1. And the next slide. Their growth, their growth is going to be driven over the next few years by new stores. I told you in 1 year, basically they break even and the stores become profitable. So that's how they're going to double their sales and they're going to triple the number of stores in the next 5 to 7 years. Next slide. And the other thing they're going to do is they're not well represented in the Northeast. So they're going to build up to 400 new stores in that area. And they're expanding. What they're looking at is they're in urban areas, they're in semi-rural areas. Where they currently have stores, they want to have more stores in those areas because every store that they have is profitable. Next slide. And this was something I mentioned earlier. Right now they're piloting their 5 and beyond. That's where they have items that are greater than $5. And what they're finding is that attracts I'll say a client or a customer with more money. And so they buy more, and every transaction by a customer, they make more profit. And so they're piloting those. And within most stores in the future, you're going to have 5 and beyond sections. Next slide. So my conclusion is that 5 is a medium-sized, fast growth company. It's well managed. I said it's overvalued because it's trading over the 5-year average PE. But it is a buy up to $214, up to $202 if you want a 15% return on high PE. And I say it's a worthy candidate to watch or purchase. Given the volatile pricing, there's a chance that it may drop and you can get it at a better price, but it is a good investment at the current price. Thank you.
Thank you very much, Rudy. And now we'll have Cheryl tell us about Arista Networks. Go ahead, Cheryl.
All right. Again, I'm from the DC chapter, and I belong both to Nova and Happy Destiny, and Kevin and I are two of the partners in that club. Arista Networks is on the New York Stock Exchange, and I found it on the BI ticker heat map, and also, as we'll show in the next slide, I also found it in the January 2023 ticker talk. And there you can see on the ticker heat map, it's circled there in red. Okay, Arista Networks is a leader in data-driven networking. And what I mean by that is that decisions are made based on data, and that the technological advancements have made it possible in networking capacity to expose and transport data in unprecedented amounts, huge amounts of data. And Arista does it best. They are the leader in this. And this is a large, fast-growing market opportunity. Their scalable architecture with single operating drive, lower TCOs, and TCO is total cost of ownership. They have expanding market adjacencies, excuse me, and product customer diversification. And that means that the nearness of two components increases the effectiveness of both. And they have high differentiation, quality, modern operating model drive profitable growth. And differentiation is a method used to compute the rate of change of a function. And in their 2023 platform summary, they have over 50 new platforms. And that is in cloud grade routing in the AI spine, low latency and HPC applications, cloud, cognitive, and desktop to closet. And they're all well positioned in multiple growth areas. Here's Arista at a glance. They have trailing 12-month revenue of $5.6 billion. The 5-year compound annual growth rate through fiscal year 2022 is 21.6%. The trailing 12-month gross margin is 61.5%. The IPO was created in 2014. They're a leader in 100-400G, which is sharper and better contrast. and they're run the Gardner Leader Award 2020 Magic Quadrant for data center and cloud networking. The S&P 500, they were added in 2018 to that grouping. They have over 9,000 customers, and they are the Forrester Wave Leader, which is network analysis and visibility in Q2 2023. And here is the agent platform innovation. Started out into fiscal year 2010 and worked their way all the way up to fiscal year 2022 for 4,381 billion. They have a seasoned management team with domain experience, and here are their leaders within their groups. They all have been with some kind of management team in AI or in networks for 10 years or longer. Here is Arista's growth drivers. They have 2023 going from 37 billion. Let me move over my menu here. It tends to get in my way. Okay, and it is 60 billion they are projecting in 2027 for the total addressable market. And that's the TAM. Arista's 2.0 business goal. Again, they have that total addressable market of 60 billion, and that is from 2022 to 2027. They're going to have it in the mid-teens, around 6.5 billion in revenue goal in 2024. That's 10 to 12% greater year-over-year growth in 2024. And they're going to have campus targets of 750 million and AI networking target of 750 million by 2025. Cloud Vision, which is Arista's next generation identity solution, is a timing for cloud-based networks access control. And they will have platform integrators, users and devices, and service integrators. Simple, scalable, and secure. Here is their total revenue growth from 2022 Q3 up to Q3 of 2023. You can see the numbers yourself. I won't bother reading them. Again, gross margin, same thing, growth there. Operating margin, they have quite a big growth in Q3 of 2023. And diluted earnings per share, again, quite a bit in Q3 of 23. Their approach to capital allocation, net income increased by FY 2022 of 1.4 billion. Their approach is to maintain a healthy balance sheet, fund the business, large aggressive competitors, invest to strengthen operations, merger and acquisition in strategic opportunities, share repurchases to offset dilution and return cash to the shareholders, and dividends as the business matures. They're going to do merger and acquisitions of 145 million and retain in the business working capital investment 912 million and share repurchasing 670 million. This is the stock chart for Arista Networks. I kind of like to look at that angle of the business. They are quite a bit up in their RSI, up into the 60s. You don't want it to get too high, otherwise it might be time to sell, or too low. It is maybe time to buy in. Again, this is just one way of looking at things. It's not the total package. As you can see from the chart, they are at their highest level in terms of their prices right now, at the 216 and 64 cents. And that bottom chart with the black and the red bands shows that there is quite a bit of momentum. It's down a little bit, but still it's higher than where it's been before this chart started. This is from Value Line, wanting to show you that the PE ratio that was listed, this is, I believe, in September, that it was 28 as it compared to the 35 for the average. They are looking at projections between 5 and 15% annual total return. And these shares of network have been on a tear of lately, and that is why that it might be a little bit overvalued. However, the net profit margin, which is that red line, arrow line, is showing an increase. And so at that point in time of when that value line came out, they were a possible triple play, at least a double, a strong double, possibly a triple.
4 minutes, Cheryl, 4 minutes.
Thank you. Here is Morningstar, looking at the different peers, but the thing that they have going for them is they have that wide momentum for the that makes them a good, strong competitor. Here is the SSG. Again, in the core, there's the legend for the different companies that are their peers and the industry average. In historical sales, all of them are kind of grouped together there, but they are below the industry average. The middle one there is the historical earnings per share. Again, looking at the numbers for both, they have the higher averages of the growth rate over the 5-year period. Here is the profit on sales, the debt to capital, and the return on equity. Again, numbers showing that Arista Networks are the leader among their peers. Here is the legend for the stock price and the sales and earnings per share review, both up straight and parallel. But you can see the last black bar on the end there, that they're at the 52-week high. Here is the historical sales and then putting together the forecast sales growth rate, which I put at 14, which means that 14% estimated growth rate in 5 years, projected sales of $8,436 million. Here it is for the historical earnings per share, again 14, and that is going to result in 5 years of $8.22. Here is the PEs for the historic high and low PE. You can see in the red box, the 5-year average PE is lower. The current rather is higher than the average, which means they are slightly overvalued. Here is the potential gain versus the loss. 216.6 is the current price, which is in the hold area. The result is a hold upside downside of 2.5 to 1. And you can see there the different forecasted high prices, limits, and the buy zone. The conclusion is that it's a medium-sized, fast-growing, profitable company, well-managed with strong strategic vision. They're currently a hold, upside downside ratio of 2.5 to 1, with a buy price of $161.90, which will satisfy the upside downside of 3 to 1 and a 15% total return. That current price is, again, at the top of the record of the 52-week price bar. Recommend that you place on a watch list and look for price dips if this stock is of interest to you. And on to the next.
Thank you very much. So we did 2 in core. Now we're going to do 2 in plus. The first one's going to be Paychex. Jonathan's going to do that. And then we'll finish up with Brian talking about Estee Lauder. So Jonathan, take it away.
Okay, thanks, Kevin. Next slide. So we're going to talk about Paychex, and there's several areas on the Better Investing website that you can find Paychex. You can see that it's indicated it's in the top 200, listed as number 127 in the April edition. Next slide. You can also find it in the ticker heat map, and they're also indicated in several of the predefined screens in the search function too. Next slide. Next slide. So Paychex was founded in 1971. It currently has about 740,000 business clients, primarily in the United States, but also Europe, specifically within Germany and Denmark. It has 126,000 customers that have been with Paychex for over 10 years. Next slide. So Paychex is a medium-sized company. It's the leading provider of payroll, human capital management, and insurance solutions servicing small and mid-sized clients, again, primarily in the United States. Next slide. The 11% represents the compound annual growth rate for the last 5 years. And we're going to look at this again on the stock selection guide. But it also has the #1 margin. This company is very, very profitable. It is has the best operating margins in the industry. At the bottom row, that improving retention, it's been growing its ability to retain revenue retentions. And really what that means is they're able to retain their client base. And that's very important because Paychex and many of the payroll companies develop a stickiness, so to speak. There's a very high switching cost. So once a company has onboarded or signed on with a payroll company like Paychex, it makes it very, very difficult to switch companies. In fact, Morningstar has designated Paychex a wide moat, and that's significant because basically what Morningstar is saying that Paychex has the ability to maintain their economic profits for at least the next 20 years. Next slide. So I want to talk about human capital management. When you start to, and if this is the company you're interested in, this is one area that you're going to need to become familiar. Human capital management. What this is by definition is a set of practices an organization uses for recruiting, managing, developing, and optimizing employees to increase their value to the company. So basically it's a strategy, so to speak, that organizations can achieve to try to find the absolute best employees for their company. And then they manage these employees as effectively as possible. And you can see in the diagram on the right side all of the different functionalities of this human capital management, particularly with respect to management and acquisition. So, for example, the talent acquisition. Next slide. Leading comprehensive suite of human capital management solutions. So basically, they have an open source, cloud-based software technology where once a client sign on, they have the ability to sort of like a la carte select certain functions and features of their services that they provide. And so if a company signs on and they want payroll services and retirement and maybe insurance services, they have the option to be able to select those services a la carte. Next slide. The human capital management market is growing. It's quite large. It represents over $90 billion in market opportunity. The compound annual growth rate is between 5 and 7%. If you notice the diagram on the left, the dark blue circle says SMB segment. This is the small and mid-sized business segment. And you can see Paychex occupies a small portion of that, which represents 14% market share. Next slide. So these are all of the different services that Paychex offers. I put a star by payroll services because, again, they started in 1971 primarily offering payroll services, and then they started to add on these different services such as employee benefits, which includes health insurances and retirement services, and then the human resources services such as consulting and hiring services. And they also sell or provide business insurances, workers' compensation and liability insurance. Next slide. So they are the leader in small and mid-sized business markets. They are the #1 HR outsourcer. They have the top proprietary payroll and human capital management software. They process over $750 billion in financial transactions. They are the #1 401k record keeper in the United States with 1.4 million participants. And they are one of the top insurance agencies specifically for small and mid-sized businesses in the United States. Next slide. So the next 3 slides, I want to talk about the future of Paychex, where they're going. When you invest in a company, you want to know, how is this company going to grow in the future? So one of the areas is with artificial intelligence. Now, keep in mind, AI has been around for decades. One of the advantages that Paychex has is they have access to a very large, small to medium-sized business data set. Again, they have over 740,000 clients, which represents over 10 million employees. So there's millions of interactions with clients and their employees every day. This is a huge database that they're going to leverage and take advantage of. They've been leveraging AI for many years, and they're going to continue to invest to realize the full potential of AI in the future. Next slide. What this slide is really showing is that the graph is showing their investment in their software technology. And this is another area that they want to continue to take advantage of and grow. And I put a red star by that 13% because this represents the 5-year compound annual growth rate of the human capital management revenue growth for Paychex. Mainly attributed to their continued investment in their software technology too. Next slide. And with respect to the future growth, there's a long growth runway with multiple drivers. And again, they're going to grow their client base. They're looking at expanding their share of the wallet, which includes the human capital management software. Again, they're going to leverage their technology and innovations, such as with artificial intelligence. They're going to monetize its data and create new solutions for their clients' employees. And then they also are exploring many merger and acquisition opportunities too. Next slide.
5 minutes, Jonathan, 5 minutes.
Okay, all right, thank you. We're going to look at their revenue and earnings on the stock selection guide, but this is another illustration to show the consistency of their growth, their fundamental growth data. Next slide. Paychex is a cash machine. They're growing cash like crazy. They have strong cash flow. Their dividends have been increasing. This is showing the last 5 years. The stock selection guide is going to show a 10-year pattern of continued growth. Their free cash flow represents $1.5 billion, and their return on equity is a fantastic 48%. Next slide. So this is a high quality company. This is the epitome of what we look for in a high quality company. These lines are really nice and straight, with the exception of the hiccup in 2020. These lines are almost perfectly straight, and this is what we look at or looking for. The open green and the open blue circles are the analysts' forecasts, and you can see that the analysts are also projecting continued consistency in their sales and their earnings growth. Next slide. And this is showing the 10-year growth rate for dividends and free cash. Next slide. Management scorecard. Let's look at the bottom row of spreadsheets. So profit margins show that Paychex, again, has phenomenal profit margins at 38% on a 5-year average. And this is better than the peer and the industry groups. It's also better than the direct peers of ADP, Paylocity, and Paycom. Return on equity is fantastic, 41%. And this is comparable to the industry averages and a little below the peer group averages. And then the debt is also very low when you're comparing with the industry and peer group average. So overall, management has been doing an excellent job running this company. And this is another growth metric that we look for to determine a high quality company. Next slide. So what I just wanted to show, again, some consistency in the sales and earnings growth, specifically regarding on a year-by-year basis, too. So you can see this consistency with the sales and earnings growth rates over the last 10 years. Next slide. The spreadsheet above is my tabulation of many of the analysts' data, and you can see that the overall average for sales and earnings is 7% and 8% respectively. And so I use 7% in my forecast at the bottom table for both sales and earnings growth. I also highlighted in the green box in the table above, $178. This represents the analyst's future high price forecast. So this is also a helpful guide for me when I'm selecting my high PE. Next slide. I like big charts. Every company I analyze, I use big charts, and big charts is at the bottom. And one of the things that I look for is this rhythm with respect to the PE. And you can see between 2014 and 2020, there's a cyclicality to this PE, and I put these red dotted lines to designate the high and the low PEs throughout this cycle. Between 2020 and 2023, I would consider that more of an outlier, and you can see from 2023, we're reverting back to this signature PE cycle, which is what I like to see. So. This was very helpful, in addition to the table above, for me to select a high PE of 30, and we'll see that on the next slide.
1 minute, Jonathan.
Okay, thank you. So the average high PE, I selected 30. That gives me a high price of $185. And remember, the analysts are forecasting a long-term high price of about $178 on average. So this gives me returns between 8.4 and 11%. Next slide. So Paychex is a medium-sized company. I'm saying it's a moderate growth company, primarily based on their earnings growth rate. It's very well managed, and currently it's fairly valued. So I think this is a fantastic company to, at the very least, include on your watch list. And just keep an eye on that price earnings ratio. And when it comes down, it might be a fantastic entry point, and you can scoop up some shares. That's it. Thank you.
Thank you, Jonathan. And last but certainly not least, the pride of Southern Maryland. Brian, take it away.
Oh, thank you, Kevin. Tonight I'm going to be talking about Estee Lauder, EL. It's in the December 2023 magazine as the undervalued stock. Next slide. Corporate overview. They were working out, making potions out in the barn out behind the building. And in 1946, Estee and Joseph started the company. It's grown into one of the global leaders. It says it's delighting customers and for beauty products and experiences. 25 plus products are sold, approximately 150 countries and territories. It's been dominant in the high-end fragrance and cosmetic categories for a long time. It reports its sales and earnings income in 3 regions: America, Europe, and Middle East and Africa, and then Asia Pacific. Next. It has 5 divisions: skincare, makeup, fragrance, and my favorite, hair care. For those that know me, that's probably not real. And other ones which we'll kind of discuss. Next slide. This I thought kind of showed the entry point down on the bottom, working up to the premium at the top, and then the classic from the left over to the progressive over to the right. So that gives an idea where most of them fall. Next slide. For FY22 and FY23, the change for skincare was down 17%, makeup down just 3%, fragrance is 0%, hair care was 6%, and the other was 10%. Next slide. I found this while I was looking at the strength, weakness, opportunities, and threats. I'm not going to go into great detail, but I left the web address down below. There's a lot of good information if you're interested in purchasing this company. Next slide. So there are a couple stumbles. If we go to Q3 in FY23, which was about May, there was a net sales decrease of 12%. Earnings per share declined 72%, and it took a hit from about $250 down to about $200. Things settled down in June with the fiscal year. And then the next slide. In Q1 of 2024, in November, we had another little bit of a stumble. It went from 130 down to the recent low of 102. Net sales decreased 10%, but the diluted earnings per share declined from $1.35 to 9 cents. You can see that the overall results that they delivered some expectations, but we're lowering the full year outlook. They accelerated and expand the plan to rebuild the profitability in the next two fiscal years, 2025 and 2026. Next. Here's the company description box from the SSG. It's in the consumer defense sector, household and personal products. It's a large company. Morningstar gives it a financial health of C. And the numbers in there we've talked about or we'll talk about soon. Next slide. This is page 26 from the December magazine. I just wanted to show that at the time of selection, it was $1.44. The recent market price they talked about was 143. We'll see that it's a little bit less than that. Next slide. For the detailed estimates, I looked at the CFRA. So I chose that for 2024 and 2025 values, value line for the 2027 values. Next slide. You notice that the sales track relatively steady. However, the earnings per share are not quite as steady. One thing I would like you to notice there in the middle, the analyst estimate for sales of 4.4%. And I'll mention the EPS long-term estimate of 13.2 near the end. Next slide. Here, just to show the historic sales, along with iPerfume and Helen of Troy, were relatively steady throughout the time period. Next slide. Historic earnings per share up until the 2019-2020. Then things got a little bit skewed. Next. Here, evaluating management, the same for the pre-tax profit, the return on equity, the top two, again up to 2019, relatively stable, and then jerky after that. Total debt in the lower left, that was probably in 2019, 2020 was for financing completed acquisitions, including the completed acquisition of Tom Ford, one of their new top brands. And in the lower right, the same thing for the debt to capital. Looks like they tried to get it, but 2023 looks like it started to sneak back up again. Next slide. So looking over to the sales growth trend, look back 5 years is what I usually do. And I looked at 6 and 3, and 4.1 looks like a value right in the middle, representative of those 3 years. So that's what I put in for sales was 4.1. Next slide. For pre-tax profit margin, I looked at them and I got down to 2023. It looked like it was 8.8 would be a good conservative number. So when I put that value in, the next slide, along with the taxes being about the same and the outstanding shares relatively constant, ended up with a 4.2% earnings per share growth for a front side connector of $3.43. Next slide. So here we look at the PE ratios. First 4 years seem relatively steady, and then after that it's up and down, up and down. There's one that's a $5 difference for the year. So I deleted all those outliers, ended up with a 39.6 for the high, 24.5 for the low, which is an average of 32.1. If I take the $1.27 in the current trailing 12 months of $1.52, that comes out to a current PE ratio of 84. Again, kind of out of the realm of possibility. Next slide. So forecast high price, I took 39.6, by the 343 gave me 135.7. The low price, 80% of 127 was 102.4. And if you look down in the bottom box there, the recent market low is 102.2. So 102.4 doesn't seem too bad for a low at this time. Next slide. So section 4, we look at the zone that's in the sell zone, just barely in the sell zone. Sell zone starts at 127.4, we're at 127.69. The upside downside ratio is 0.3 to 1, and the price appreciation is only 6.3%. Next slide. So the 5-year potential for the current yield of $2.64 for the dividend. One thing to note about the dividend, they are planning on freezing it at 66 cents for the next probably year, maybe 2 years. So as the closing price increases, the yield is going to go down from 2.1%. With that in mind, and the other calculations there be, the compound annual return for price appreciation is 1.2. Average yield is 1.3 for 2.6. In order to get a 3 to 1, you'd have to get down to about 50% of the current price, about $71. And that's about it. Next slide. Okay, it's a large company, a growth company. From the looks of the graphs from 2019 on, you might guess that it's not well managed. However, all that I read, the company management is trying to stay ahead of any problems caused by COVID, the slowdown of travel in the China area, in the other areas. A lot of the duty-free stores don't have the traffic through it. So what they're doing at this time, they're starting a post-COVID business acceleration program, which is why they're going to kind of be sketchy here for the next 2 fiscal years. So just keep that in mind. Currently in the sell zone, we talked about the price, the dividend going to go down. However, after in the sell zone and all that, I would consider adding it to my portfolio as a non-core position. Next slide. And here I'll explain why. If you notice the drop in May that we talked about in the drop in November, since the low in November of $102, it looks like it started to do a higher highs and higher lows, climb back up. The close today at about $139. If it gets to 140, that would be, if it doubled from there to a 280, that would be where it was in February, which is about 10 months ago. So it looks like it's on its way up. I would probably buy it anytime below about $150. I'd start to accumulate it. And one other thing, you remember that I said that to remember the 13.5% if I would have used that growth rate instead of the 4.2, I would have ended up with a 3-to-1 and a annual return of 11%. So it all depends on how conservative you are when you're clear back on the front side. Next slide.
Thank you, Brian. Nice job as always. So we went through all of these fairly quickly. And so what we like to do is just sort of do a recap and sort of ask all of our presenters to sort of ask us where each stock sort of fits in on the life cycle. And if you want to know what the life cycle is, let's go to the next slide. This comes from T. Rowe Price, and he sort of talked about how all corporations, sort of like humans, sort of have a life cycle of sort of growth, maturity, and decadence. This is also in the SSG handbook. And we're going to ask all of our presenters to sort of tell us why they selected these locations for where they think it is on the life cycle. So Rudy, tell us why you selected that location for Five Below.
Well, I thought Five Below was sort of at the top of the explosive growth. They are a relatively young company, but they want to triple their stores to 3,500 stores 2030, and they want to double their sales, because remember, each store is going to add like 2% to sales. So by then they'll have 5.6 billion in sales, and their earnings per share target is $10. The Value Line says by 2028 they might be at 11. And just remember that 75% of their compound annual growth rate is from new stores. So that's why I have them there.
All right, thank you. And Cheryl, tell us why you picked that place for Arista Network, ANET.
Well, AristaNet, as I alluded to back in the slides, is one of the excuse me, largest and has the widest moat of the AI networking groups. And so AI has nowhere to go but up, I believe. And so that is why I really said that they are still in the beginning of their explosive growth.
Okay. And Jonathan, tell us why you picked that location for Paychex.
Okay, I wanted them right on that fence between the explosive growth and mature growth. They haven't reached that mature growth phase yet, but there's still and we talked about that long growth runway. So there's still a lot of room for this company to continue growing in the future. The total addressable market is quite large. Morningstar has designated them a wide moat, which means they have a huge competitive advantage over the next 20 years. Their profitability is just outstanding. So all of this looks like it's going to continue into the future. So there's still a lot of growth for Paychex going forward.
Okay, thank you. And Brian, tell us why you picked that location for Estee Lauder.
Well, even though Estee's been around since 45 and grown, you notice the increase in debt in 2019 and 2020. They get a lot of growth through acquisitions. Like I say, Tom Ford was one of their recent acquisitions. It's a premium product. So in management, it seems even though they've had some up and down times here recently, their post-COVID business acceleration program, it seems like they, while not mature growth up on the upper end and not explosive growth, but they're sure right in that area there.
All right, thank you very much. So let's go to our next slide. And we've done all of this ourselves, and I think it's pretty much, if we go to our next slide, there we go. So now that we have this, we want you to sort of, we're going to ask you not which one you want to buy, but which one interests you the most that you want to be able to do some further research on. So that's the question that we're going to ask. We're going to release a poll on that. And then after that, we'll open up for questions. I see it looks kind of quiet in the question box. So go ahead and start thinking of your questions. And Cheryl, we'll put up the poll. There it is. And go ahead and vote. You can only vote once, as much as some of you would like to vote multiple times. And we'll see how we're doing here. Well, it looks like we got a pretty close race. 77% of you are voting. Up to 80. See if we can get up a little bit higher. I'll do my best, Ken Kavula, Carnival Barker. See if we can get any more people to vote. It looks like it's slowing down right about there. I got one more. Let's see if we can get there we go. Can we get one more? One more vote, maybe? Go ahead and close it off. That was really good. 92% of you voting. So go ahead and let everyone see. There it is. And by a wide margin. I'm surprised no one took Estee Lauder after such a stirring presentation there, Brian. I'm surprised no one even voted for it. But there we are. Yeah. So Paychex is it. We have a tracking portfolio that we keep over on Manifest, and I'll show you that in just a moment. But we'll keep track of this to see how we're doing. Let's go to, let's see, Kent, are there any questions? I mean, it's been really quiet the last couple months. No one really wants to sort of jump in there and give us any of their thoughts or ideas.
We haven't had any questions associated with the presentation, so I think we're good.
Well, people can raise their hand, that little hand icon, and we will open up the microphones for you. So let's take a look at our attendees and see if anyone has their hand up. Anyone? Bueller? No, looks like everyone is quiet today. They just come because they want to hear the melodious voices of our presenters.
Well, actually, Cynthia does have a question. So
Oh, very good.
Unmute Cynthia here. Go ahead, Cynthia. You have to unmute yourself.
Can you hear me okay?
Yes.
Yes.
Now the question is for Jonathan with Paychex. With Paychex having such a large database of PI personal information of their clientele, did they speak in your research? Did you see anything about how well their site security is, whether it's cybersecurity, just the well maintaining of such a large database?
Did you hear that? I think that was for Jonathan, right, Cynthia, because of Paychex? Or was that Arista Network? Okay, so Jonathan, so you were asking Jonathan, it's a little faint over here, so I just want to make sure. Did you hear that, Jonathan, or do you need it a little bit more repeated?
No, I did not really hear it. It sounds like there were some concerns about cybersecurity or security or risk with the company. And this company deals with a lot of data. They deal with, and we talked about that database. So they are very cautious and they're very knowledgeable about the risk of losing that data to hacking and things like that. They have a very, very robust department that will help ensure that employee and company data will always and forever be protected. So I'm hoping that answers the question. I could barely hear it though, but that's all I have to offer with regard to the security risk involved with the company.
Yes, thank you.
Okay.
Any other questions? Well, I'll tell you what, while you're thinking of your questions.
We're still good. Yep. We're still good on question.
So let's do this. Let's do a couple more slides, but Kent, keep an eye. If anyone wants to ask a question, you can raise your hand, or you can type in a question there. Let's go to our next one. So here's how you can reach us. There's a picture of us at Dallas a year and a half ago for the in-person BINC, and there's going to be a BINC in Chicago in June. So some of us will be there as well, so come and see us. But that's how you can reach us, both at Digging Into the BI at the Maryland chapter and at the DC regional chapter. And that's all of us, or many of us are there. In fact, I think, what do we got? We got almost everyone in that in that photos here. Anyway.
Kevin?
Yes.
It's going to be May 16th to 19th in Chicago.
16th to 19th. Okay, I said June and it is May. Thank you. And there's a
Yep.
guy who's promoting hair products there in the back in the green shirt. So anyway, next slide. So if you want to be on this, and again, I see so many regulars here, but again, if you have someone who wants to be a part of this, you can send them over to the DC regional chapter. And again, there's the link up sort of in that pinkish color up at the top where they can sign up. You don't have to be a member of the DC chapter. You don't even have to be a member of BI. And we will send this out. We won't inundate you with emails. It would just be for the book club, some of our upcoming educational events, as well as this thing as well. So next slide. Kent, you want to tell us why people should volunteer?
Sure. So as Kevin pointed out earlier, this presentation, this entire effort is a volunteer effort. And we as volunteers, we learn a lot just by talking with people and helping put these presentations together. So that really helps improve our skill set. However, there's also a way to get a little more benefit out of that through the Better Investing National Training Program. And as a chapter volunteer or as a chapter director, you can get discounted rates when you attend the Better Investing National Conference in Chicago this year, Dallas a couple of years ago. And so that discounted rate can add up. And you can also end up with a good complimentary subscription to the investment tools that are available, the SSG Plus and the SSG Core. And so that is very helpful as well. And so that helps improve our investing as well as improve our skill set. So volunteering, great way to go. Thank you. Next slide.
And so here's what we have coming up for next month. We have Gentech and Ares Capital Corporation, and two more that are sort of to be determined. We normally are the first Monday of the month, but since that's January 1, we're going to do this on January 8th. So be on the lookout for an announcement on this one. Once we get our last two stocks selected, we'll put this all out for everyone to take a look at. Let's do another slide. As I said, I put these up on the Manifest Investing dashboard, and I've sort of broken them out by different years, whether they were the stock to study or the undervalued features, as well as some of the winning selections, those that were selected by the audience. You can sort of take it and look and track them. And let's go to our next slide. And here's how you can find them. It's free. You don't have to have a Manifest subscription to take a look at it. And by tracking, it means we sort of put a fake $100 on each one. And you can see if it's over $100, it means it's appreciated. If it's under $100, it is lost faux money. But you can see how all of this tracks out. I'll put the one in for Paychex later on tonight. And we will keep it current. Next slide. So again, we'll have this up on YouTube. There's a link again to the YouTube channel. One last check. Kent, are there any people that have any questions or any comments?
I am seeing it's all clear.
Okay.
I want to make a comment. We have handouts, and please, if you have not downloaded the handouts, they will not be on YouTube. And so you have a last chance to download those.
Very, very good. Anyway, well, thank you very much for being here. We're glad that you came here. Share this with your friends. Come visit us on YouTube and come back next month when we dig into the BI for 2024. Good night, all.
I just wanted to give folks a few extra minutes to download. In
That's
case they're
fine.
still doing it.
Paul, you had your hand up. If you want to ask a question, go ahead.
Actually, I was just trying to download these handouts.
Okay.
Right, but however,
Hi.
I was looking to see something that says, well, these are your mentors. I've taken these classes, I've been to these meetings. It's time to find a mentor.
Yeah, you were in the SSG class that we did just recently,
Yeah,
right?
yeah, a couple of times, yeah.
Yeah, okay. So yeah, we Carol just sent out a notice on that thing. So if you respond to either me or to Cheryl, we'll get you lined up with a mentoring group.
Oh, okay.
Yeah.
So you've been attending Cheryl's club, right, McNova?
Yeah, yeah.
Yeah, yeah. Then I think it'll be good. Several of the people that were helping out in the breakout sessions were people that were in McNova, whether it's Gladys, Janet, Cheryl, Bhaskar,
Hi.
Ty. I don't know if Joe was on there, but all of those folks. So yeah, be with one of them because it's a great way to sort of build a relationship with folks there as well that are club members.
Okay. I
Yeah,
will do that.
we'll be setting up soon
Okay.
the schedules for mentors, so you haven't missed it.
Okay.
It's been coming, and then every once in a while I will get a meeting room over at the Alexandria Library, their central library off of Duke Street. So I don't know how close you are to that.
I'm not that far at all. I live in Springfield, so.
You're where?
Yeah, I live in Springfield, right by the
Oh,
Springfield
okay.
Metro.
So yeah, you are close. It's
Yeah,
just
very.
down Van Dorn, and yeah,
Yeah.
I live off of Franconia, so we're not too far away.
Oh, wow. Okay, we're neighbors.
Yep, pretty much.
Hey, I thought
Right.
I'd download those things, but I don't see them on. I thought I downloaded this thing. I don't. It looks
It's
like
under
it's closed.
handouts. There's a little. I opened it up just here on the screen.
Yeah, I can see on the sidebar. Oh, there you go.
And just click on the left-hand side, because the right-hand side is a trash can. You don't want to click on there. Click on the left-hand side, one at a time, and
Okay.
you wait until you're on what
Okay.
they
So
used to
then
call it, the menu, but they used to call it another name, and I can't think of it right this second. Wait until that opens up, and then you can click save.
Let's go ahead and do that. I think I may have done them all. Let's see. Just got a couple more here. They keep leaving me when I try to download. Okay. The
Yeah,
first one.
try to click on the blue lettering is usually the hyperlink,
Okay.
and that's where your cursor changes from an arrow to a hand.
Okay. And I've got the last one. Yeah.
Okay.
Okay. Let's see. Okay. Thank you. I got them. Got them all. Thank you.
Great. And we'll see you a week from Tuesday. Is the
Yes.
next Nova
Yeah.
meeting.
Yes. See you
Okay.
guys later.
All right.
Mhm.
Good night.
Good night.
Good night.